All right, ladies and gentlemen, we're back with the end of day post wave report of yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from postwavetrading.com, home of the world famous post wave price trigger reports. Let's jump right into it. All right, so the first chart is a chart of Litecoin. And as you can see, this light blue line here indicates that the market is neutralized. All right, and in a state of consolidation. And you can see that here, how the price action is staying within this bar here from November the 10th, and it's just moving sideways. All right, so no real commitment, a lot of flip-flopping around here, just moving sideways. And I'm anticipating that this is going to carry on for some time still. Then once the market is ready, it'll come up here and take out the bullish pointer from the week of November the 8th. All right. So in the meantime, in Litecoin, you're neutralized. All right. Neutral. Next up, we have the euro. As you know, the dollar has been all the talk of the town. And if you look here at the euro now, you'll notice that this market is in a bullish position, and it has been for quite some time. You can see how elongated the line stretches out here, and I'm anticipating more upside in this market as the euro is trying to recover ground. All things being equal, the market should get back up to 120. 120 is possible in this particular scenario. The market is wide open with no overhead resistance. It's just wide open. So this one is looking really strong right now. Next up is the pound sterling. As you know, there's been a lot of trouble going on in the UK. They're going through prime ministers like people change underwear. And believe it or not, it's in a bullish position too. I think the initial target for the pound sterling is going to be the 135 area. All right. So I think 135 is going to be the initial target on this one, all things being equal. Now, this is a bear market rally in both pairs. Just remember that the euro and the pound sterling, these are bear markets. So without a moment's notice, the bear market can relock in at any time. So you want to be prepared for when that eventuality takes place. But for now, we don't have any signs of bearishness whatsoever on the chart. It's looking wide open to the top side. Moving right along, taking a look now at Bitcoin, which has been all up in the news because of what's going on with FTX. And right now, the Bitcoin is still consolidated. All right, it's been going under periods of consolidation for a minute now. As you can see here, this is your bar from November the 9th and November the 10th, and that's your consolidation zone, and that's where the market has been staying. Right now, you've relocked back in on the neutral side. So right now, Bitcoin is in a state of neutrality. All right, you're at a deadlock between the bulls and the bears. No trending whatsoever. All right, you're in a bear market, so any upside potential is going to be looked at as a bear market rally, and the market could relock in on the downside at any moment. So just keep that in the back of your mind as well. But you're in a neutralized position, very much so, in Bitcoin. Taking a look at Ethereum, and yes, the altcoins have been following Bitcoin's lead. And you are in a state of neutrality here as well in Ethereum. All right, the market is going nowhere. There's no trend here. You're still in a bear market. Any upside potential is a bear market rally, and the market can relock into the downside at any moment. So keep that in the back of your mind. You are neutralized in the crypto space right now. I think everyone's waiting to see where the chips are going to fall. Looking at the US dollar, all right, the US dollar is still in a bull market, but it's in a bull market correction, all right? And it's wide open to the downside. You are in free fall in the US dollar, all right? No support. Right now, the dollar is on course to drop back below parity, all right? That is the initial target for the US dollar. I'm looking for the dollar to correct further and drop below par. All right. Just want to put that out there. you're going to drop below par. You're going to drop below parity, which is dropping below 100 in the US dollar. Looking at the crude oil situation, the bears are in control and you are in a bear market. All right, so looking for sideways to lower prices to continue in the oil. Next up is gold. There's been a lot of speculation about what gold and silver can or can't do. And right now, the bulls have taken over in gold. All right. But 1800 is a serious resistance zone for gold. All right. That's a psychological resistance. Gold always has a hard time staying above 1800. You see what happened last time? It was up here flirting with that and it just got crushed. All right. So 1800 is a real psychological overhead resistance for gold. All right. So the bulls have this going right now. All right. So right now, I think that the market really wants to take out the all-time highs. So there's nothing stopping gold from doing that. It just needs to get out of this bear market trend and get into the green, and then you'll be ready to go. Taking a look now at silver. On silver, we did have this crash alert coming into today, and we didn't get any downside production. Instead, we got an inside day, and we have a major crash alert for tonight into tomorrow's trading for silver. Top of the Kumo cloud at $20 an ounce is the downside target. That's $1.52 run to the downside. So beware if you are trading silver. Looking at the Dow Jones. So the Dow has been a very interesting market. So we came into today with a crash alert, and instead we got a narrow inside day. This is the ticker DIA. This is the diamonds. It tracks the Dow futures. And as you can see, this market is now under a crash alert watch. Top of the Kumo cloud at $315 a share is the downside initial target. All right, next up we have, let's see, where are we? Oh, here we go. All right, taking a look now at GLD. Okay, we just looked at gold battling 1800. GLD is battling 170. All right, so it's wide open though. The bulls have this on lock right now. This is a bear market rally. Of course, the danger is that the bears can come in and smack it back down. And you do have a gap up here from November the 10th. So, of course, at some point, the market's going to have to come back down and fill this and then rally. It would show you the strength of the bear market rally. If it comes down here and fails after closing the gap, then you'll have your answer there too. But for right now, the bulls do have the favor in the market. There is a bullish bias in gold. Looking at the Russell My Hustle coming into today, you can see we have a crash alert for tonight into tomorrow's trading in the Russell. It's already at the top of the Kumo cloud. So bottom of the Kumo cloud around the 175 level is going to be our initial target. So that's a $9 downside move that we are anticipating in the IWM, which is the Russell ETF. Looking at the crude oil ETF, OIH, you can see we have a crash alert for tonight into tomorrow's trading here as well. Kumo Cloud is at $230 a share. We closed today at $312 a share. So that's quite the downside potential coming in crude oil. All right, looking at the NASDAQ 100, and this is the ticker QQQ or the cubes. And you can see here the sellers have entered the market. And we have a crash alert for tonight into tomorrow's trading, a drop below the bottom of the Kumo cloud at $280 per share is in play. And we do have this gap down here. So I'm thinking the market wants to come down and do it. So you have the potential to drop below 275. So we're looking at a potential $10 plus downside run to occur in the NASDAQ 100. All right, here we go. Next up, we got silver by way of the SLV, which is the silver ETF. And the top of the Kumo cloud here is going to be around the $18.50-ish And you got a crash alert coming into today. We got an inside day, but nevertheless, we still are under that crash alert. And your gap is back here from the week of November the 4th, and that will put price action back around the $18.50 level. So that's $1.25 downside move potential in SLV. Next up, we have the S&P 500, which is the ticker SPY. And we have a crash alert for the S&P 500 for tonight and tomorrow's trading. This will put it back down inside the Kumo cloud, south of $390 a share. We have the gap from the week of November the 10th. And I think this is going to put it in the lower side of the Kumo cloud. So it's between 385 and below. So 385 and below is the initial target. So we're looking at a potential $10 plus downside move coming in SPY, which is the S&P 500 ETF. Taking a look now at bonds. The ticker here is TLT. And as we've been calling for, the market is getting closer to the bottom of the Kumo cloud, which is the initial upside target. I think the market will fail here once it gets up there, though, and it will do so because it has to come back and fill the gap that it created on the week of November the 10th. So once that market back and fills, this will be a true test of the bear market rally to see if it is truly ready to bottom out and run. Failure at this gap closing will most definitely cause the bears to come back into the market and relock in on the downside. And then at that point, we haven't seen the lows yet because the 52-week lows happen on the week of October the 24th. So the potential here is very grave in the bond market. It is grave at this time. We looked at the US dollar index. Now let's take a look at UUP, which is the US dollar index ETF. And you can see here the consolidation at the current low levels. And you did have a gap down on the 11th. So at this potential, we have free fall. So this thing is in free fall. It could easily drop back below $20 easily with increasing momentum. You are still in a bull market category, but you are in a full-blown correction. So we'll have to wait and see where the bottom is going to be, but you are in free fall in your US dollar. And last but not least is your miners. The ticker is XME, and you have a crash alert for tomorrow's trading in the miners. All right. So miners are not doing so well, even though we are still in the stage of a bear market rally, although it a weak one in both gold and silver futures. So this is going to be interesting to see what happens. Yeah, I've heard about the contagion in the crypto space. I've heard about the what is that? What do you call that? The inversion situation going on in the treasury yields and the bonds. Everything's a mess, and it's been done by design. They messed this market up on purpose when they shut down the global economy over an illness that is equivalent to the flu. So this is all by design. And you and I both know this. That's why you need the pulse wave so that you can navigate through all the noise and all the hype and all the sensationalism and everything else, because the pulse waves will tell you exactly what's going on and how to handle the market. If a market's neutralized and stuck in consolidation, there's a way to handle that. If the market is trending and it's rallying and hitting new highs, there's a way to handle that. If the market is falling apart and hitting new 52-week lows, there's a way to handle that. Every market condition and scenario, there's a way to handle it, and that's what the pulse waves give you. So if you haven't already done so, you're going to need to take that 14-day free trial, see how much money you can make trading alongside us for free. I think you will surprise yourself, and you're going to accidentally stumble onto a methodology where you can create a very powerful income stream for yourself working from home. No more having to commute to that office, 5 days a week. No more working, dead end jobs, you know, You can be in business for yourself and trade full time at home. All right. Anyone can do it. All you have to do is be able to read and write and understand basic instructions. And that's what we got for you at the pulsewavetrading.com website. So, with that being said, you know what it is, man. Smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So, remember to take what you can and give nothing back. What up to Thomas up in the live chat? Thank you for being here, my man. And what up to Glass? Good to see you here. And I'll see you guys in the trading room. Peace out.